Nerd Stock Talk, episode 3. Thanks for joining me. So this is where nerds talk about stocks in a language that other nerds can understand. And today, tonight's episode, we're going to be talking about has the Squoze. So we'll explain what that means later on in the show as well. And if you're interested in the show, if you're seeing us, we do this live every Saturday at 8 p.m. Eastern Standard Time, not 8 p.m. Mountain Time, 8 p.m. Eastern Standard Time.
Well, that's really because Eastern Time is the only real time. All other time is based off of Eastern Time, and if you're some other time, then I'm sorry, but you're wrong.
So we're gonna jump right into it, and what we're gonna do. I should say it. So my co-hosts here are JP Wildman and. There's JP and Mike, the Ranger of Dark Hollow. Huh? Is that your?
That's my blog. That actually has nothing to do with finance. It's more about like running around in the woods and pretending to be Aragorn or some craziness like that.
Well, yeah, and you know what? And this is the kind of
shoot bows and stuff. I'm a complete nerd. Like,
yeah.
I mean, seriously, most people, I would assume that pretty much everyone watching the video knows one of the three of us, right? And, like me saying, "Hey, I've got a blog about running around in the woods pretending to be Aragorn." Jeez, what's going on?
Yeah, come on, yeah, man. Yeah,
I know. The professional. I'm so unprofessional. Anyway, no one's going to be surprised about this.
Get it together, Mike.
Oh, sorry.
All right, we're gonna jump right into it and talk about our picks from last week. So what we're gonna do first, I would like to first. I want to talk about my picks first. So what I'll do is I'll talk about my picks, and then we'll jump into Mike, and then talk about JP's. So this was my pick, so everybody remembers. The other guys did not give a chance to do a pick, so that was my pick. You guys were so impassioned about your picks that we ran out of time for me to give my pick. So,
well, you're the host. Well, I think that's like a host fail. That has nothing to do. We're just the comedy relief here. Like,
so I just want to be really democratic about this, and we had a time thing. So we'll jump in now into Mike's picks. So Mike, these were your picks from last week. So you had Blackberry and GameStop. You want to talk about those?
Yeah. So I liked Blackberry. I still like Blackberry. I'm long Blackberry. Unfortunately, I saw the price of GameStop dropping like a rock last week, and was like, sweet, I'm buying back in because that bad boy ain't Squoze yet. So I'm down, not a small sum of money, but realistically, I'm not actually down because I'm playing with gains from before. So, yeah, I'm sure we're going to talk more about GameStop. This is like the nerd GameStop show lately. We did not plan this crazy market stuff with GameStop when we decided to do the show. Just sort of
right. Yeah. So that GameStop was down about 79%. BlackBerry was down 8.5% over the week. So and let's talk about what JP's. JP, your pick. JP, AMC. Want to talk about that?
Nope.
It's okay. So we got to be so AMC, BB, and GME are kind of in the same.
They're meme
stocks, right? So when one goes down the toilet, they're all pretty much going to go down the toilet, and really it's because the Wall Street insider hedge fund guys are a bunch of cheating jerks. They're essentially the orcs of the financial world. Maybe goblins. I don't know. They're terrible.
Or orcs or goblins, yeah. There you go. But like you mean the Lord of the Rings orcs, not the World of Warcraft orcs.
No, not the World of Warcraft orcs. Those guys are honorable awesomeness. Like I'm talking about the Lord of the Rings, eat the hobbits while they're still alive orcs.
Okay, all right.
Not the noble warriors of
Duratore. To be clear, the only reason AMC is down and didn't squeeze is because Robinhood shut trading off on all of these highly volatile stocks.
That wasn't last week, that was the week before.
Same with GameStop.
Yeah.
And it just killed the momentum, and it did not pop like it should have.
Right.
So, one of the things that we want to talk about too in our, in one of our segments is that it's a good transition into talking about. So the layperson who's not been really following along, or people thinking about wanting to get into this, they always hear the short squeeze. What is? How would you describe what? And I'll pull up something on here, and I'll have you guys to kind of talk us through this. But JP, do you want to talk about specifically what, when people talk about the squeeze, has it been squoze? What exactly are people talking about that? What is that?
So what they're talking about is a short squeeze is essentially when a stock has been shorted to the point where there are more shorts on the stock than there are actual shares available.
Okay.
So in the case of GameStop, you see here the short interest, it's called, 25 million shares. That's half of the float. The float is the available shares to be bought. Now, these numbers are a little ambiguous at this point. Reporting on these numbers happens every other week, and it's really kind of arbitrary the way these things are calculated. I've seen numbers as high as 227%. We will not know for sure until Monday the 9th, Tuesday the 9th. When's the 9th? That is when the new reports are due out. So right now, the best estimates are that the short is 49% of the float. What happens when a squeeze happens is that the price actually does the opposite of what the shorters intended. So these guys that are shorting the stock are betting on the stock to go down.
Way down.
Way down. And if it does, they make a lot of money. However, if the price for some reason does the opposite, in the case of GameStop, we had an army of internet trolls that bought the stock for no other reason than to squeeze the hedge funds and screw their plans. There was a little bit of good news with GameStop as well. They have a couple new board members and a new business plan, it looks like. So that helped drive the interest to it. But when the price goes up, the shorters are then forced to buy the shares that they shorted in order to cover that short. So essentially, when you're shorting a share, what you're doing is you are borrowing shares to sell at a later date for a given price. If the price is lower than the agreed upon strike price, then the shorts don't have to do anything and they make a bunch of money. But if the price is high, then the person that bought that put is going to want the shares at that price, in which case the folks that shorted it have to buy the shares and then deliver those shares to the person that bought the put. Unfortunately, when the price is high like that, and a lot of people are shorting shares, and a lot of folks all of a sudden need to buy those shares, what happens is it drives the price up, and it becomes sort of a positive feedback loop, which sends the price of the stock to the moon. And so that's what we're talking about when we say the squeeze. It's happened. It happens a handful of times. Has happened a handful of times in the stock market history, and GameStop is one of them.
So with that said, but there's really no way of telling when the squeeze is going to happen then.
No, and just the simple fact of there being high short interest doesn't guarantee a squeeze either. Okay. There are several stocks on the market right now that are really, really squeezed. It's all a matter of timing. Options contracts expire every Friday. And so I can pick a date any Friday into the future to short GameStop on and have that option expire. Where it starts to cause a squeeze is when you have a particular date where there's more options expiring than others, and that's where it can tend to really ramp things up. And so that's what's going on with GameStop right now.
Okay. And so you have GameStop shares. Mm-hmm. You're still holding them?
I'm still holding them, yes.
Okay. Yeah. Yeah.
Well, that's kind of the thing, right? Like, so we were talking that we're down, but realistically, when it comes to the market, you're not actually down until you sell. And so if we, my current cost per share is like $176, which I think current price for GameStop is like $60. So if I was to sell now, I would accomplish nothing other than locking in that massive amount of loss. I mean, even even if the stock goes down further, it's possible that someday it might go back up. It's just a matter of, okay, when do I want to take my ball and go home, so to speak.
Right. Yeah. Yeah.
The short interest is still high, and there's a lot of speculation, judging by the number of shares that were shorted, which last week or when the squeeze happened was 80 million, 79 million shares were shorted. Despite the claims by some of the financial pundits that the shorts have covered, including the hedge funds themselves, the volume that we saw during that squeeze does not seem to match up. It is barely enough to cover the short interest, let alone all of the hype from the retail investors that were buying. I mean, people from all over the world were buying this stock. So it seems to make sense to me that what happened was the shorters just kicked the can down the road. They bought calls very expensively and covered their shorts, and then pushed that date further out into the future, hoping to make money on the way down. And likely they did on the downside of this wave, and they're just hoping to wait out interest, hoping everyone sells before these new puts are coming due.
Right. And so I remember we talked offline about this, is that they said Tuesday, what is that? There's a short interest report, or how does that work? What is that?
So every 2 weeks, the hedge funds are required to report their puts and their calls and their options and their position. And it's still going to be a little cloudy because we're still basing half of the calculation on interest on information from 2 weeks beforehand as well. So, it's not going to be the full picture, but it'll be a much more accurate picture of these numbers.
So you'll say that, so the Reddit will be pretty active on Tuesday then, I think?
I would think so, yeah.
Yeah. Okay. So, just to clarify, just say this again. We're not giving financial advice. We're telling you what we're doing, and
we're also make your own, freely saying that we're not very smart. We're not
make your own due
advice.
diligence. Yeah.
Yeah.
And as JP said, I think being well-read gamblers in many of this. But when it comes to being well-read, though, it's to JP. You want to talk to us about? We have our educational segment here, talking about how to read charts.
What a great segue!
Yeah. See, how do you like that?
And that's why you're the host, Barney.
So what we want to do, part of it too, is just making sure is making making stock and making investing accessible to anyone who has an extra $5 or whatever it is, because and part of it too, and I'm excited about this segment because I just want to make sure also, JP, that I'm doing it right. I used to be playing Words with Friends when I was doing something in the morning. Now which I cheated at because I just also had Scrabble, so I just went to the Scrabble dictionary and it worked just fine. And a part of it too is is learning more about how to read some of this stuff. If someone logs in and starts opening up their own, either a Webull account or a Robinhood app or something, one of those things, being able to kind of start understanding what they're getting into. And a part of it, what we always say is, when you first get into investing, look at the companies you already know. So if, like you said earlier, if you play World of Warcraft, look at Activision Blizzard. If you're a toy collector, look at Hasbro. You
should always stick to that, right? I mean, stick to industries you know and understand, unless something crazy unless you hear about this goofy meme stonk GameStop AMC nonsense. I worked in the car business for a while. I worked in the financial industry for a while. I kind of tend to pay attention more closely to those things that I understand how their businesses work.
Yeah. You know what? And I think, if you have a lot of friends who if you, everything that you utilize in your life, there's probably a publicly traded company that is a part of that. So no matter what it is, like you said, if it's cars, if it's entertainment industry, video games, any of that stuff that you're talking about that you're a nerd in, whatever it is, any type of games. Nintendo is doing really well now. So everything actually has that. Utilize your own knowledge and passion for something that it's something that's going to be lasting. that would be the first, especially if you can do fractional shares. So you don't have to buy a whole share, you can buy parts of it. So you ready to pull up your thing there, JP? All right, so we are looking at now, this is Yahoo Finance for GE.
For GE, and this is the 3-month chart. And so what you're looking at is the price over the course of 3 months plotted on a chart. The green and red bars below are volume indicators. And if you hover over those volume indicators, that's going to tell you how many shares were bought and sold during that period. So right now, that little green line at the bottom there, it represents 50 million shares. And the green, all that indicates, it doesn't mean 50 million shares were bought. It just means that there were more shares bought out of 50 million than were sold.
Okay.
So if you see a red line, that means more shares were sold than bought. This line in particular is 79 million shares that were exchanged, and the majority of those shares were sold. And so if you click on the upper corner next to the pencil there, Josh, you can change this chart from a line chart right next to the pencil over one. Yeah, and you can do candles.
Okay.
So candles are probably what most traders use for information when they're trading.
Oh, wow.
And what a candle is there's actually several pieces of information in every data point. Starting with it, I don't know if you can zoom in a little bit and get a little more focused on a candle. That candle right there, for instance, that is telling us several different things. Number one, it's telling us the price at the opening of the period that it's measuring. So this is a 3-month chart. I don't know what the interval is, 1 day intervals. Okay, so on January 26th, this candle represents the entire day of January 26th. It's telling us what the price was at the open. It's telling us what the price was at the close. It's telling us what the high for the day was, and it's telling us what the low for the day was. Now, when the candle is red, that means that it opened at the top and closed at the bottom. So the price.
Oh, okay.
The tail, you see or the wick at the top, the tail at the bottom. The wick at the top is where the high was for the day, and the tail at the bottom is where the low was for the day.
Okay.
And so as you're moving through, you can see what the price does for each of those intervals. Now, if you see next to where you selected for the candles, you've got 1 week. That is 1 day. You can change that to 4 hours if you'd like, which is every half a day. Looks like you're frozen up, Barney.
Oh, no, I'm not. No, I'm still here.
So you can change that 1D to 4H, and that will give you the information. Nope, all the way over, next to where you selected for the candle.
Oh, okay. Oh,
there you go. So depending on what your attention to the stock market is, if you like to make a trade on a Monday and then check it on Friday, you might want to do a 5-day chart or a 1-month chart with a 4-hour interval. And that'll kind of guide you in terms of when is a good time to buy and when is a good time to sell. Now, what you can do is you can draw a line. If you go over and select line, just do a regular old line.
okay.
And then put that line on the high, the highest point. And then make that line go to the next high on the right-hand side.
Like,
right, yeah, keep going. The next highest high.
oh, right here.
All the way over, yeah. Then do the same thing for the lows. I mean, I guess I would choose a longer duration, but that's going to give you what's called the channel in which the stock trades in.
Okay.
So you can, again, stock trading is all about probabilities, really. Where you draw those lines, that you form a channel, and you can pretty much guarantee that the stock is going to trade within that channel for the most part.
Whoa! Don't use words like guarantee.
It's a much higher probability that the stock is going to remain in that channel. If you buy at the lower end of the channel, you stand a better chance to make money by selling at the upper end of the channel. If you're buying at the lower end and now you've got more of a defined channel, and you can see where that stock rose out of the channel, that was a good indicator to sell because it immediately fell back into the channel and bounced around inside there. Same thing when it fell below the channel. That's a good strong buy signal that chances are it's going to rise back into that channel and it's going to go up and down in there. But anytime it reaches the top, that's the resistance. They call that the resistance. It gets up there and it always comes back down. And same thing on the bottom side, they call that support. It touches that support line and it always goes back up. And so time you're trading.
Seems to most of the time. Always is a tricky word.
It seems to most of the time, sure.
Yeah.
But you can do this with a bunch of different date ranges depending on, if you buy a stock and you think it's going to be a year before you want to sell it, click on the 1 year chart and you can sort of estimate when a good time to buy that stock is, just based on the trend line. So that's a basic overview of how to read a chart and how to gauge when a good time to buy is. Now, obviously, there's other factors involved, like
Yeah, this is a weird time in the market, so.
That's why I picked General Electric, because General Electric is a huge company that is somewhat insulated from.
This is so as you say, it's high risk, high reward, low risk, low reward. Looking at the price difference between here, on average you're looking at $11.50 to $10.50. So it's not
right. So you're making you're likely to make $1 a share over the course of a year.
It's not a very volatile stock. The with a stock like General Electric is it does pay dividends. Now, if you go on the left-hand side, it says indicators. 50, that is the 50-day moving average.
Okay.
It's going to calculate it on the closing price. And it's going to use a simple average, which is fine. So click save. And we're going to see a line show up, a purple line show up on the chart. It's going to give us the average price over 50 days.
Okay.
Now, depending on your duration and how long you plan on holding it, you might, if you're trading it weekly, you're doing daily, you might want to do a 5-day moving average. I run a 50, a 5, and a 200, and there are points when those lines intersect that are clear buy or sell signals. So if you add, you can add another indicator and moving average indicator and do a 200-day.
Okay. Huh. Okay. Cool. All right. So this is good so far. We're running out of time. So let's we'll talk more about this. We'll see what more we can talk about that. So let's talk about our picks for next week. JP, what are you looking at? What's your pick that you're personally going to be looking at for next week?
I'm going all in on a company called Canoe. Their symbol is GoEV. They have put out a electric car platform that contains the batteries, the motors, the wheels, no body, and it is a drive-by-wire electric car. And the business model is that they will sell this car to other electric car companies for them to build their cars on top of, and it's a completely autonomous vehicle. Now, that in itself is cool, and they also have their own sort of modular car bodies that they're going to be producing themselves. But the bread and butter of their business is going to be subcontracting these platforms called a skateboard out to other car companies. Where this becomes a power play, I think, is that they have a contract with Hyundai and Kia to provide the platform for their electric cars. Now that's cool, and that's definitely going to translate into a bump in their stock price once production happens this summer. These things aren't slated to enter production until this summer. But what you're going to start hearing about is a deal that's going on between Apple and Hyundai Kia to build Apple's electric car. Apple is planning on bringing an electric car to market. So Canoo is going to be providing ostensibly the platform for the Apple electric car. And I really think that this stock is going to be a $200 a share concern within the next year or two.
Okay. And right now it's around $16 a share.
It's very inexpensive, especially considering all the electric car. This stock has sort of flown under the radar.
Yeah, it's an inexpensive EV play. I like it too.
Yeah. All right, Mike, what's your pick for next week?
So I was gonna say something different, but I feel kind of bad about saying something that I don't have my money in, and basically I'm ride or die with GME, man. I mean, I'm either gonna win big or I'm gonna continue to lose. Eventually, I'm gonna get to a point where I'm like, okay, I'm done with this nonsense. But at the moment, all my money's there. So GME, ride or die, baby.
Okay, all right, we'll put you down for that one. I gotta say, for mine, I have some pretty substantial. So Tencent has always been my investment. I've always been putting money in Tencent. I've been very, very happy with Tencent. I would say, though, I'm going to keep my eye out for Activision Blizzard. I'm looking at that one because they're coming out with. So just to clarify, its stock has gone up 35% in the last 3 months, and it is. And plus, BlizzCon Line, what they're calling it, is coming out February 19th. So it's going to be, and I think we're going to see its shares kind of go up probably after they make some very significant announcements on that. So,
what's Tencent though? What is that? I never heard of it.
Tencent basically is a mobile game platform. I think they're part of Fortnite, I believe, or something. But they're, according to Morningstar, has always been rating them as a 94% buy. So it's been.
Sure, if you're going to listen to the dirty cheating experts.
But yeah, so that's what I'm looking at. I'm looking at Activision Blizzard, and I'm looking at Tencent has always been. I've since last March, since I started playing, I put money in Tencent. So, but Activision Blizzard specifically for the next couple of weeks. So
nice,
cool. All right. Well, thank you very much, everybody. This has been episode 3 of Nerd Talk Stock, and thank you very much, everybody. And we will see you next Saturday at 8 p.m. Eastern Standard Time.